Hi, this is Sean Casey from Trade Canary, and today we're going to look at how to sell stock on ThinkorSwim. ThinkorSwim is the software you can get for free from Charles Schwab and connected to your Charles Schwab account. Once you own stock, then at some point you, of course, will want to sell that stock. And there's a couple of different ways to get to the position and the trade form that you can sell your stock. One way is to go to this trade tab, and I'll come back to that in a minute, but I also want to show you that you could go to the monitor tab, and you can see here that I own ASML. I've got 50 shares, the price I paid, the current price, so it's up $46 a share, etc. And I could right click on this position and click create closing order to sell the 50 shares. And if I do that, it gets me this trade window, this order window down here. I'm going to close that for the minute and just go to the top of the screen here so that you can see the other way to get there. And assuming I'm going to sell ASML, I could come up here, right click up here and click that I'm going to sell, and it's going to open up that same window. If I wanted to change the stock, let's say, I didn't really want to sell ASML. I want to sell Tesla. Okay. And then I put in Tesla, and then it would allow me to go and say, I want to sell Tesla. This just pops open the option chain drop down window. I'm going to close that so you can see what I'm doing. But let's go back because this will let me, because I own ASML, actually place an order to sell it so that you can see what that order looks like. So now that I'm here, yes, I could say, okay, I want to sell this. And it would automatically default, in this case, to selling 10 shares. You can tell it's red, so it's on the sell side. If it was green, it would be buying, but I want to sell. And I can change the number of shares. I don't have to sell all 50. I could sell 10 or 15 or 1. I could also change the value in units to 100% of my position, so I don't even have to look. I'm selling it all. Or I can change it to a dollar amount. Now, this brings up an error because this defaults to $500. It must be above the current price, and the stock is at $745. So I need to sell more than $750 worth of stock in order to make that work. If I put in 750, it would allow me to go ahead and try to make that trade. But I want to put in the actual shares of stock. I find it much easier to follow. Let's just say I want to sell 10 of those right now. Position of sec automatic is always good. You could be doing something different. You could be selling stock short to open. That's an advanced strategy. Probably not doing that right now. Or in this case, it would be to close, but auto will work perfectly. It's ASML. It's stock. The price, it picks the limit price. The limit price is the price that is currently being bid because that's what someone would pay immediately for the stock. See, the market is live, so this keeps changing. I can lock it in a minute, and I will. It defaults to placing a limit order. A limit order means that you're going to get that price or better if you choose that price. And so this stops moving. Let's say that I wanted to get 746, and now I would either get 746 or the stock wouldn't sell. And there are several options that I can use in selling. I could sell at the market. If I do that, this would change. Now I would get whatever the best price is the instant that hits the market. Might not be 746, might be 745.30, might be 746.25. I don't know. I'm just guessing at that point. Usually not the way you want to sell the stock. I could also sell it at a stop price. The stop price means that when the stock gets to 746, that it sells at the market. There's a couple different ways to use this stop price. One is that I could use this basically as a stop loss order, and the stock is trading right around 746 now. But let's say I don't want to sell it yet because I think it has further to run. But I've got a good profit in this because I paid about $700 for it. So I don't want to let it go below 740. Now, if I put this 740 in, that means if the stock backs up, goes down to 740, it will trigger the sell order, but it won't sell unless that happens, which means that I will sell when it hits 740. I get the market price, so it's guaranteed to sell, but you don't know what price it's going to go at because if the stock is dropping rapidly or it gaps, it could sell at 738 or 725 or whatever, right? It could be any number. So that's one way to do this. Another way to do this with a stop is to have a stop limit order. Now I could say when it goes back to 740, I know that it's dropping back. I don't want to get crushed on it. I'm not willing to take just any number. I want to get at least, let's say 739.75. So now it says, hey, when I hit 740, my sell order is active. And if I could get 739.75 or greater, then I will sell at that price. That's what the stop limit would be. There's a stop order that triggers it. The limit is what I'm willing to sell for that or a better price. I could also hit a trailing stop order. This gets a little more complex, so you got to follow along. You can do this on a percentage basis, which is way more complex. So let's just look at doing this on a dollar basis. Right now, it defaults to 10 cents. That won't make a difference. This is a stock that moves a lot. But let me put in $10. So my trailing number is $10. That means right now, stock at 746. This order does not trigger until the price hits the trailing stop price, which means right now, with the stock at 746, the trailing price is 736. If the stock goes down to 736, it triggers a market order to sell. But in this case, because it's trailing, the stock doesn't come back to 736. It keeps rising, and it goes to 750 and then 760. Now at 760, the trailing price moves up behind it. It's always $10 behind it. So the 760 stock has a 750 trailing price. And if it goes up without coming back to 750, it'll go to 770. And then the trailing order price is 760. So let's pretend that it went up to 770, then it backs up to 760. You see what we've done? We've allowed the stock to go up. We've gotten more profit out of it, but we've protected it from dropping back on a big drop back. And now it comes back to 750. The sell order is triggered at the market. Hopefully you followed that. If not, you come back and just listen to this again. With a stop limit order, this says I'm going to trail the price by $10. But I'm also going to pick the only price that I'm willing to sell it at. And you're going to have to adjust this from time to time as the price of your stock hopefully goes up, because you're setting a limit and the stock will not sell, even if this triggers. Let's say you say that I'm only willing to sell at 765, right? Now, it doesn't matter if your stop loss triggers at 735 or 7 whatever down here, because until the price gets to 765, it won't sell anyway. So be careful when you use the stop limit order that you pay attention and you raise that as you go along. A couple other options you have. One is just sell at the market on the close. Take your trading for the day, sell right when the market closes. Some people do this when they want to get out of positions that they don't want to hold either overnight or over a weekend. And limit on close allows you to sell if the price has hit a certain limit. You could sell right on the market close, which is the 4 p.m. close, not the extended hours close. Now, let me just go back and just put a limit order in here so it gets cleaner. And we say I'm willing to sell at 765. I have some options on how long this order is good for. The market's open, so I could say it's just good for the day. That gives me trading between 9:30 and 4 p.m. I could say that it's good till canceled, which means that this order will continue to be good until at some point it either executes or I cancel the order. Price gets to 765, it trades, or I cancel it before that actually happens. And this is good till cancel, runs for the market hours from 9:30 to 4 p.m. Extended hours would mean I'm going to trade today in the extended hours, and those are for many stocks like ASML that start at 7 a.m., go to 9:30. Then you have the market from 9:30 to 4, and then the PM extended hours, which are from 4 p.m. to 8 p.m. I could also use good till canceled extended hours. And by the way, I don't see any reason if you're setting a specific price that you don't want to trade in extended hours normally, because that's going to give you the opportunity to get the price that you're looking for. You could also just trade in extended hours for the day only. You could trade good till canceled in only the extended hours. You could trade just in the AM extended hours or in the PM extended hours if you wanted to do that. But let's just leave this as good till canceled with extended hours because there's no reason not to. I want to get this price. I'm be happy with this. And then when I'm ready, I click confirm and send. That gets me this confirmation window and I can read what it is I'm going to do. First of all, you notice highlighted in red, it's a sell order. Red isn't bad. Okay. Red just means you're going to sell. If I was buying it, this would show up in green. And it shows I'm going to sell 10 ASML at a 765 limit, good till canceled with extended hours. And now this is closing my position because I currently own the stock. When I take this action, it tells me what's going to happen. I'm going to get $7,650. There's going to be 21-cent fees, so I'm going to get slightly under 76.50. That has no buying power effect, but it will increase my buying power for stock. All right. And my buying power for options when I do that. So I could sell this if I wanted to. I have some options down here. I could change the account that I'm in, but obviously you want to make sure that the account you're in matches the account where you're selling the stock. Could also delete this order. We can edit this order, which would go back to the window below down to here. I could save this for the future, or I can send the order and place the order. If I send the order, I have the option to cancel the order if I want to, if it hasn't executed yet, and this wouldn't execute right away. But if you put this order in and you decide you don't like it, you just go to where the order is on your account and you can then delete that order, cancel the order, and it will execute. Unless you're placing a market order, you can usually go right in and cancel something. If you're like, oh man, I do want to change something, you go right in and you can cancel that or replace that order as you please. So this is how to buy a stock using ThinkorSwim connected to your Charles Schwab account. I hope this has been helpful and I wish you successful investing.